with the Modi Sarkar in power, and how has Dalal Street fared in the last 2 years? Nigel is here, done a lot of number crunches, and he's here with the snapshot. Nigel?
Well, Reema, just 2 years ago, I vividly remember the Nifty went dancing away to around 7,500 on May 16, 2014 itself. We ended the day at around 7,200. Remember, we had a big rally in the run-up to the election itself, but on that day, we did come off close to around 300 points from the top. But how has the journey been, really? Friday's trading session, we closed at around 7,815 approximately. In this interim, though, in the last couple of years, we have seen that the Nifty even hit a high of around 9,120 approximately. So from there, we're off close to around 14% approximately. But let's take stock of what's happened in the last couple of years. If you take a look at the Sensex from in the last couple of years, that one in fact is telling you that we are higher. In rupee terms, we are high with a gain of around 6%. But keep in mind that the FIs, they are eyeing dollar returns. So for the FIs, really, they are making a losses of close to around 7%. In dollar terms, the Sensex is down 7%. Then the market capitalization, though, is up by close to around 20%. Now we are at around 95 lakh crores. 2 years ago, we were at around 80 lakh crores approximately. So that's telling you that there were a lot of stocks in the broader markets that have done very, very well. But first, running you through all the indices, the Pharma Index has been fantastic in the last couple of years. That's continued as well, 45% gains we're seeing over there. The Mid-Cap Index as well is giving you returns of around 40%. And the IT Index giving you returns of around 20% approximately. On the flip side, losing indices, PSU banking space hasn't done well. That's lost 30%. And the Nifty Metal Index, that's rallied big time. It's rallied close to around 30-40% just in the last couple of months, but that's still down close to around 30%. And the Realty Index as well has taken a knock. But let's run you through all the Nifty losers first. BHEL has lost more than 45% of its market capitalization. Hindalco as well, after the big run, yet that one is losing close to around 35%. And the big one in there is SBI. That's lost close to around 25% in the last couple of years. But talking about losers, let's focus on the large cap losers, the real big heavyweights on the Nifty. ICICI Bank down 23%. That's definitely hurt the index. And ITC as well lost close to around 11%. So those are the big heavyweight losers in the last couple of years. Let's pull up some of those Nifty gainers, though. We have Eicher Motors. That's giving you returns of close to around 200%. Oro Pharma as well. Remember, these are the couple of new entrants in the Nifty. They have given you big returns, 150% coming in there. But let's talk about the large caps again. Infosys, 50% return on that one. HUL as well, more than 40%. And TCS, giving you returns of around 15% approximately. The big outperformance has really come in if you take a look at the broader market. So pull up a few stocks there. Indocom, that's higher with more than 1,500%. Bajaj Finance as well, giving you big returns. And PC Jewelers as well in there with returns of around 270%. Pull up some of those quality stocks as well. Britannia, dream stock in the last couple of years, giving you returns of around 270%, 240%. And Jet Airways as well has managed to come in there with a gain of around 150% plus. But losers, there are plenty. A lot of these highly indebted stocks, JP Associates, JSPL, Unitech, all of them are the big losers in the last couple of years. Pull up a couple of those PSU stocks as well, SAIL as well as NMDC. NMDC one has been giving out big dividends, but that as well is sitting with a cut of around 40%. Adjusted for that, it'll still be down close to around 30% approximately. Banking stocks, a lot of them are going to be in focus today, besides Bank of Baroda. But just take a look at some of those losers. We have OBC, IOB in there with losses of more than 50 to around 70%.
Okay, thanks, Nigel, for that. And we'll also be looking at